All right, welcome back to Market Day Report. Thanks for tuning in if that's what you're just doing. And then, hey, if you've been here with us all day, it's my job to make you stay. So let's take a look at some of these markets, see if we can make you stay with these markets, because ultimately these markets are your money. Let's look at corn. We bring that corn table up. Look at that. Well, 12 cents lower in that July contract, 779.5. This is disappointing. We go out to the deferreds. That Deese is 6.5 cents lower. Lost that 750 level of 746.5. So corn, we don't like that board. Let's move on and see if we get anything better in soybeans. And I think we do. Here we go. 34 cents higher. And that July soybean board, 16.47 3/4 is last. We're only about a penny and a quarter off the highs there, folks. It looks like it's settled down a little bit here. But look at Novi New Crop, over 15 bucks, 20 3/4 cents. I've been saying, see if we can get a 15 handle on it. We did. 15.01 1/4. So there you go. New crop beans over $15. Wow. How about Chicago wheat? What's going on there? Well, we're 13 3/4 cents lower in that Chicago wheat contract. 11.65 is last, 7 cents from the lows, but we've had a 40-cent range over there today. Wow. And if you go out, say, to the deferreds, we've lost even 15 1/4 cents in that March contract. 11.71.5 is last out in March. How about hard red wheat in Kansas City? Off 4.5 cents in that July contract to 12.65.5. About 9 cents off the lows there, so not too bad. We're also you got a 4 to 5 cent loss as you go out, say, the deferreds to March. March is off 5 1/4 to 12.61 even. Finally, well, we got spring wheat. Let's take a look at Minneapolis. That's up 1 1/4. That's good. We stopped there. Nice to see an upboard. 13.17 1/4 is last. And then if you go out to the deferreds, we actually lose 5 cents in that March. 12.94 last is there with a nickel loss on the day. Finally, let's take a look at cotton. July's off 33 points. Very quiet. 145.20 in cotton, but we're close. Well, we're not. We're in the middle of the day's range there. So that's that. All right, let's bring in Todd Horowitz and see what he's got for us. Todd, thanks for being on the show. Todd is with Bubba Trading, and he is in Las Vegas. I can tell by that extensive art collection. And it's like your office is in a museum. But anyway.
Well, I want to take you after the cow guy. That's my aspiration in life.
All right. Well, we had a WASDE report yesterday. We had a couple of inflation numbers this week. Wrap it all up for us. I mean, where do you stand? Listen to these prices we gave you in the commodities.
Well, look, the commodities, I'm not at all worried about, Scott. I think, look, we get higher prices. We're going to have churning in bigger ranges. The percentage move is what you should be concerned about. And think about it this way. So, if I would have told you a year ago we'd be distressing over 780 corn, what would you say? And I think we'd all be fairly happy. But I think they're going a lot higher. These inflation numbers, 11% PPI. I mean, it's laughable that they continue to say that they have it under control. That is so far out of control that these prices can only go higher. And we still haven't discussed, and nobody wants to bring out in the mainstream is there's going to be a shortage in food. Where's it going to come from? We're going to be the chief supplier no matter what the dollar does, because we're the ones who have the inventory, unless Mother Nature decides to cause even more issues, and that becomes a much bigger problem. So to me, it looks like we're going to see much higher prices, and you're starting to see the backs catch up. Normally we have a little bit wider range in backwardation, right, and we're starting to see the back ones catch up too.
Well, it has snuck out in one area. There is a food shortage, but it's a baby food shortage. So that's out now. We'll see if anything else comes out. Stay right there. We're going to go away. We're going to pay some bills. We'll come back and talk with Todd Horowitz. He's with Bubba Trading after these messages. All right, welcome back to Market Day Report. I am Scott Shelly, otherwise known as the Cow Guy, and this is one of those few times I get to use that as a cheap segue into taking a look at these livestock markets. Why don't we look over and see what we've got going on in live cattle? All right, live cattle, what do we have happening here? It's, what I call this board? This is called the smorgasbord. A little something for everybody, right? June's up 67 cents to 132.32. August behind it is up just 7 cents. But then October's off 32 cents to 139.52. And we've got December sharply unchanged at 145.97. A little something for everybody there, but you could tell that's kind of a quiet board. All right. We've got feeders. They've enjoyed a lower corn board. How much have they enjoyed it? Well, $2 as much, right? August is up $2.07 to 168.60. That's about 30 cents off the highs there, folks. And if you go out the deferreds, we still have a 77-cent gain. And that November contract at 175.47. And let's take a quick peek at lean hogs. What's going on out there? Finally finding a bottom, I think, maybe. June up $2.75 to 100.22. And then even July's got a $3 gain, $3.17 to 101.02. So on the back of that good news, let's bring back in Todd Horowitz from Bubba Trading. He's in Las Vegas. Todd, what do you think about those numbers as far as livestock prices?
You know, Scott, I'm worried about the inflation and again the spending of the consumer. However, they look really good from a technical standpoint, and they look like they have some room to run. And certainly, I think if the equities go back under pressure, although they're higher today, but they are under pretty significant pressure, I think that will bring some outside money or new money into the cattle and into the hogs. And I think the hogs have probably, around 100 is probably a pretty good base. That we're not going to go much lower than that. I think that you can see, much higher prices. I mean, don't forget, we did get up to about 125 or 128, which is awfully high, even for hogs. So I think everything looks pretty good. And I think, again, you're going to start to see, I think, new money come in as the equities continue to sell off harder. And I think every time the equities sell off, you're going to see some new money come into what are considered much better markets right now, which is the grains and livestock.
Well, we did definitely see some new money coming into the grains yesterday. We had open interest go up. So those numbers we got did attract new buying. That's clear there. So it'll wait to be seen. But real quick, we got about 25 seconds. Long and shallow or short and sharp when it comes to a recession? What do you think?
I think it's going to be long, and I think it's going to be, it's going to be deep when they finally get to it. The problem is
Debbie Downer.
Well, we keep avoiding it. If we would just step up and take it now, right? Let's take our medicine right now and get it over with instead of trying to prevent it. That's what always been the problem. And you know that for years I've always been against that.
Yep.
Let it happen. Let it be over with.
You're a Paul Volcker guy. All right, thanks for that. That's great stuff. Have a great weekend in Vegas. It's Todd Horowitz from Bubba Trading in Las Vegas. We'll bring it back to Nashville. Thanks very much, Todd, and I'll throw this over to Suzanne.